Hello, everyone. We're super pumped today to have the GMX team on. Welcome, guys.
Thanks for having us, Crypto Kev. Actually, just to clarify, we're actually not part of the GMX team. GMX is, not to be too pedantic about it, we're actually, we're a DAO. So it's actually, we're some of the contributors to the GMX DAO who are on the call.
Awesome. So maybe before we start, do you want to maybe talk a bit about yourself? So who is basically there in the call so people kind of understand your roles in the DAO?
Sure.
Thanks so much. Yeah, so I'm CoinFlip Canada. I'm involved with strategy, partnerships, business development on behalf of the DAO. And I've been doing this for a little over a year since we sort of founded the platform. And
I'm Fredigar Chris, or Fred Chris, you can call me for short. I'm a community contributor that kind of just mostly focuses on kind of strategic kind of like partnerships in terms of like the Arbitrum ecosystem. So reaching out to other projects, communities, seeing kind of like what they've got going on and seeing if there's any, collaborative opportunities to be had between the two communities.
Awesome. So can you tell us what GMX is basically and why it was started?
Well, GMX is a on-chain perpetuals and swap AMM. It enables leverage trading at up to 30x leverage on leading crypto tokens like BTC, ETH, Uni, Link, AVAX. And the reason it was really, you could say, created was to address what we saw was a huge gap in the DeFi space. Within public blockchains, as we're slowly developing out all the building blocks that sort of have been within walled gardens of centralized exchanges, we felt there wasn't really a great user experience with, clean, simple execution, and that was sort of one of the pieces that we were aiming to tackle, and that was both for users, but actually, kind of the area that a friend mentioned that he's involved with, which is working with other protocols, really just being a base infrastructure layer so that anybody who needs to hedge, risk, adjust it within the DeFi space has a trusted partner in that space.
Okay, awesome. Can you tell us a bit about how the project started? Like who is at the origin? Do we even know? Like how did this kind of movement start?
Absolutely. So, in many ways, before GMX, there were actually a few other community-based projects, one on Ethereum called XFix, and another on BSC, or what's now BNB chain, called Gambit. And there were many common contributors between those different protocols. But as sort of everybody was working sort of on different efforts in different areas, there was sort of a decision taken to sort of, you could say, merge, absorb, create something new, which was GMX, which launched at the end of last year on Arbitrum, with this goal of really, having worked through a lot of ideas, concepts, experiments, taking it and now turning it into an actual platform that could potentially scale and help to address some of these, DeFi requirement needs in the market that we were talking about. And so to that extent, I think it was a series of trial and errors. I mean, one of the tests was doing leverage tokens. Another was trying to do something similar to GMX, but working with a stable coin. And you sort of started adding, removing, auditing, and through a lot of community feedback saying, look, this doesn't work. This makes us uncomfortable. Can we not do this? The core contributors who were sort of building out the code just sort of kept evolving the product to where we see it today.
Awesome. And so all that stuff in a very anonymous fashion. So can you tell us a bit more about why people decide to, if the team is anonymous?
Well, I think there's a lot of different reasons that teams choose to be anonymous. One obviously is personal safety and security, especially in the crypto space today. But I think the other one is that sometimes it's more important and valuable to just simply let the code and your work stand on its own. obviously we do have contributors now like myself and Fred who will go out and will help to sort of communicate what we as a DAO are doing. But at the same time, it's sometimes better, and especially in the early days where, especially in DeFi, where I think, you know, you really do need to make sure it's about code, let enthusiasts go, let them review, let them understand what you're doing. You could say there was a certain joy having, you know, some very OG people in the crypto community who would then suddenly drop into the Telegram and be like, I just looked at the code. This is crazy. You know, like it's so elegantly done. And I think, you know, I think if I don't want to speak for any one individual, but if I take our, you know, our main developers who are contributors, they much prefer that they communicate through code.
If I can also add to that, as just, you know, kind of like a community contributor myself, I think it's a little bit more comfortable for our members to kind of just be in that kind of middle, right, pseudonymous space that kind of the internet is known for, where like, you know, people kind of, you know, go online with kind of like these online personas. And I think, you know, the crypto space has kind of been a really great place for that to kind of be kind of like a native ecosystem for people, where it's like, you know, it's normal, right, for you to be interacting with, you know, just that online persona. And in many ways, it makes it a lot easier for people to kind of, you know, ask questions related to, you know, kind of being involved with crypto in ways that they might not be comfortable asking, you know, similar questions in a different environment, say like, you know, maybe traditional finance or something like that, where things are a little bit maybe more intimidating to engage, or a little bit more, you know, foreign. You know, crypto is a lot more, you know, inviting and similar, I think familiar, because of the fact that people can kind of just tap in with, you know, that pseudonymous kind of like, you know, anonymous online profile that they've just, you know, they just have.
Yeah, sure. So okay, you mentioned some OGs who basically popped into the Telegram saying this is like really amazing. Like, do you have some example, or is there some people that you can talk about that basically spotted you early on and kind of helped either also kind of shape what GMX is today?
Oh, okay. So I think maybe the better way for me to approach that is that it's probably respecting that anonymity. I think people who have not publicly sort of stated support, is probably better for me not to sort of say, well, they chose to support. But, you know, I think one of the easiest things to see, and this is one thing I will just say, you know, we've never paid influencers. We've never done like private deals to get people to support, you know, things that are very common in the space. And that was very much driven from our ethos of being, you know, very community driven. As in, you know, the example being, if somebody owns, you know, tokens in GMX, they've gotten them from going and buying them in the market. That's just, you know, the way it is. So, you know, I think you can see many people, you know, online, people like, I don't know, say Algod or Crypto Dog, or I mean, even Arthur Hayes before, when he was publicly making making statements about it, or WN, et cetera, who've been, I think, great public supporters. But more interestingly, it's not just been them. I mean, as we said, one of the things that we spend a lot of time on is integrating with other protocols, right? Integrating with other protocols who are using GLP, which is our multi-asset liquidity pool that backs the entire platform, as an asset that they're holding for investment purposes. So a lot of DAOs are holding that as an asset. We have other protocols who are integrating with us from a trading standpoint. So a lot of the feedback is also from people who have founded protocols and projects, and how they are now working and integrating with GMX. I mean, I would say that we have probably, I can comfortably say we have probably, you know, a dozen plus integrations, you know, in the works, in the pipeline, that are happening. And that is really, you know, driven from a developer community who said, you have a product, it makes sense, and it's something that, you know, inherently was designed to be able to integrate and be, you know, this sort of layer that others in DeFi can work with.
Yeah, okay, makes a lot of sense. Okay, so maybe like kind of like back to when the GMX started. So what's the biggest challenge when you're starting a decentralized derivative exchange?
I would say maybe not just for GMX, but for, I think anybody looking to launch a DEX, an AMM, something in the space, it really does come down to how is a protocol able to deal with limited liquidity, which is quite often a reality in the early stages, and how can you deal with that liquidity as you scale? And I think that's one of those things that, we spent a lot of time, and again, this was from, contributors who worked on XFix, which had a product called X2, which was leveraged tokens. It was, wonderful product. It was deployed on Ethereum mainnet. It basically allowed people to be either long or short various assets at, 3x, 10x leverage, and counterparties could come in and take the other side and were incentivized to take the other side. But the liquidity was fragmented. You couldn't get enough trading volume. You got high transaction fees. And so suddenly you reached a point where unless you could reach scale, you couldn't maintain a proper market. And so I think, as an example, that, it's one of those things that, was a lot of time was spent on GMX, making sure that it was a platform that, in theory, when GMX launched, even if it launched only with a few million, it was instantly able to create liquid markets based on zero impact pricing, utilizing oracles as opposed to a self-balancing AMM for doing price discovery. It basically removed a lot of those limitations that would otherwise hinder a purely, let's call it purely an equation-based AMM by bringing in those additional external factors. And now as we're scaling up, as GMX is scaling up, we just about 2 weeks ago released the code to our auditors and to our community for, call it a parallel or sister protocol that will also now be able to better address, low liquidity tokens, even as liquidity on a platform like GMX now scales to, over 400 million. It's so, we spent a lot of time looking at sort of that entire life cycle, both how do you support, nascent markets that just do not have, don't necessarily today attract capital, and how do you also address large markets? They have distinct challenges, and you have to try to find a solution that can straddle both ends.
Awesome. Yeah. So I mean, you kind of like mentioned it already a bit in like the way that helped you grow, but like if you had to say like what makes you kind of different from other derivative exchange out there, like what would you say? And in other words, like how do you manage to stand out so much in the bear market and have like a lot of people talk about you?
So I'll try to do this without necessarily saying anything against other protocols. So I think, one thing we say, we're in constant contact with all the other leading on-chain perpetuals platforms. And in many ways, I would say that, we don't view big exchanges as an enemy either, but if there was somebody we're competing with, we all collectively view them as our competitors as opposed to each other, because we actually would like to all grow this market. But I think the reason that GMX got a lot of traction was, a lot of transparency with our model. We effectively with our Oracle system, you're being offered execution pricing based on the deepest, most liquid markets in crypto, which to date are, exchanges like Binance and FTX and Bybit and the like. I think that was very important because it ensured, transparency as to what was driving the pricing around the model. I think being on Arbitrum and really showing a real commitment to the Ethereum ecosystem was also, something that really went a long way. I mean, today, if somebody asks me, I feel that the line between Arbitrum and Ethereum is very small. And the reason being that effectively Arbitrum has started capturing that DeFi layer for Ethereum, where it simply just makes more sense, not just because of fees, but because of block time sequencing, not being able to have transactions front run, where the Arbitrum ecosystem just provided a very compelling experience. And mind you, we've also been able to take that same experience and apply it over to the Avalanche ecosystem, where we deployed a few months later. So I think those have definitely been things that have caught people's attention. But finally, I don't know if you said it, but it's kind of maybe appropriate given we're talking to Yield Labs, it has been this conversation about real yield. From the very beginning, our focus has been how do you make sure that you build a system that creates these deep liquid markets, but also compensates liquidity providers, fairly and reasonably for both the risk they're taking on and the capital they're making available to create these liquid markets. And I think that attention on really making sure there is a real utility, there's real value coming from real work. I think that has been really well appreciated because people can now look and one could debate if we're in a bear market that is days, weeks, years, but they can say, but we can see why this is sustainable. I think that has drawn a huge amount of attention from across the crypto community.
Yeah, absolutely, and it's absolutely one of the reasons why we were but basically why we're talking today, because we've seen this kind of hashtag real yield come up quite a bit on social media, and actually looking at the revenue generated and how you guys basically distribute this to the stakers and the liquidity providers. Is there something that you want to add regarding this real yield?
Well, I definitely think that it's something that we focused on, but it obviously, I think, even now when I look at other protocols in the crypto space, you sort of look back and say, okay, so what is it that you are delivering in terms of value, and how is that value then going back out to the participants in your platform, your protocol, right? Be it token holders or be it liquidity providers, be it traders, users, and I think making sure that that's a focus of how you look at this is important, because I think that's in many ways it's very similar to how I think even non-crypto world is now again focused on saying this is not just about big numbers, this is about making sure there is something here that is sustainable. And today, if you're a liquidity provider on GMX, it's kind of like running the exchange itself, right? That's where the value that would otherwise go to the let's call it the in-house order book that a lot of exchanges might maintain, or their preferred order book partners. That value goes to our GLP holders, and I think that's been hugely valuable.
Okay, so I mean, pretty much linked to that, like who are these liquidity providers? Who are these GLP holders? And maybe can you also, related to that, tell us a bit about the tokenomics, because you said before, no private deals, etc. Anyone who basically has the tokens basically bought them on the market, etc. Like, so it maybe like briefly talking about the tokenomics to what circulation is out there and all that stuff, so people can really understand how different it is from for example, like we look at there was a lot of noise in the last day about the APT launch. Like, basically tell us a bit more about how the protocol was launched in terms of tokenomics and fairness.
Okay, so as I mentioned, GMX itself sort of was, you could say, created through a series of governance votes, taking it, sort of absorbing a few other communities, XFix and Gambit. I don't have the exact numbers off the top of my head, but I know that the vast majority of the supply was actually distributed to all the community members from those two prior protocols. And then we kept the majority of our future emissions focused on two big areas. One was a certain amount of initial liquidity incentives. I'll come back to those in a second, because we really did try to find a way that was avoided some of the pitfalls that have beguiled other protocols. And then a fund which we've only started to now really utilize, which was our ecosystem and marketing fund. And again, our approach has been very different there compared to, I think, what a lot of protocols have done. In terms of liquidity incentives, we actually have been providing incentives in the form of what we call ESGMX, which have all the governance and economic properties that GMX, the GMX token has, but they're not tradable. They're not exactly a soul-bound token as Vitalik had proposed, but they are very much in the nature of that, which is that through the actions that you do on the protocol, you earn them. And you have the ability to convert those into a more liquid token if you'd like to, through a vesting process that can be done over 1 year, sort of block by block. So it requires you to be very patient if you want to sort of, let's say, monetize any incentives that the protocol is giving. But you have the benefit of choosing to simply stake them and be a long-term recipient of the protocol's growth in terms of utility and other value that it's creating. And then the other one, and the other one was, as I said, the ecosystem and marketing fund. And that's where we've taken, again, a very different approach. We rather than just simply putting out marketing dollars, which, again, competing against, and mind you, especially over the last few weeks with listing on FTX and Binance, big fans, but at the same time, very challenging to be competing in sort of any sort of marketing or promotional side against behemoths in that space. And we've instead focused our resources on partnerships. We've done token swaps, we've done grants, just really helping to get people to be able to build and expand out on GMX. So rather than going and let's say, okay, let's assemble more funds so that we can bring more staff and do more ourselves, why not instead plant the seeds that will allow an entire group of additional developers, projects, protocols, communities to instead support the growth of GMX. And that's also been the other side that we've really focused on. Beyond that, we have a small allocation. I believe it's about 2%, which is for the team. Again, entirely on the basis of, we only want to keep the number of team of contributors. It's just a small allocation because the rest really should be coming from having external parties and other groups build on top of what GMX is.
Great. So can you tell us about, if you have to think, what are a few things that you got wrong until now? Because probably not everything went like the best. And what were the main consequences of these things?
So I would say things that we got, I don't know, so wrong, or I'd say things that we've been able to learn from that we could have done better. I think, it's a weird. I'm actually going to tell you something that I think we've done very well, but we also are so conscious about it that whenever we drift, we'd really focus back, which is that, making sure that community feedback is active. So, while I think in the early days, our community feedback was very, very active as the protocol grew. I think some of that dialogue became a little complacent, and instead, the moment we put the focus back on that dialogue, I think it really, again, helped to spur the amount of social media engagement, the amount of new ideas that were coming, and just sort of rejuvenated our governance forums to really make sure that our community, who has really been the backbone for having this protocol be what it is, be able to keep pushing it forward. And I think, now sort of, as I said, making sure that the community fully embraces the responsibility they have through governance is an opportunity that, we were probably a little late to, and we've now, refocused on. And, I'm not sure. I mean, listen, I can say that every day, we wish we had more hours to focus on security. We wish we had more time to focus on building. We wish we could have just a few more resources to, be growing just a little bit quicker. But I think to a certain extent, we're quite happy with how things have worked out.
Okay. So you just mentioned security. So what are the steps being taken on the security side?
So I would say that it's a multi-pronged approach. One is obviously there have been audits. We're getting fresh audits, obviously now done for the successor protocol. We do a lot of testing before we push updates to the live now, which has definitely been, I think, one of the things that has. I'm not sure I would say slowed down the pace, but it means that, with the amount of live capital that's within the protocol, if we push an update, it needs to be thoroughly tested, which means the entire life cycle of testing and making sure that even the smallest update, adding a new stable coin, even, to one of our pools is something that we spend a lot of time back testing and making sure that it's live before anything gets pushed out. And I think the other one is really around OPSEC. I mean, we've always had a public multi-sig with sort of noted members of the both GMX and I guess you could say DeFi community. But we're spending even more time on now working on automation, making sure more and more functions of the protocol are effectively addressed through keepers. Initially, right now, most of that is through our own sort of controlled keepers, but continuously moving towards having that all decentralized and be able to be managed by any external party. So I think that's, again, one of the things that we've said very often, because it does come up, quote unquote, decentralization, permissionless, it's an endpoint. It's very hard. There's been very few protocols that I can say have truly been able to set and forget and deploy. And they are legends in the space. I mean, if I think back to something like Uniswap, where I give immense credit that they've been able to do that. But with the number of external factors, we know that it's not as easy to get to that just yet. So it's just really an iterative process towards making those changes. But again, it just requires a lot of testing before implementing each of these steps.
Yeah, absolutely. And maybe on the top of these steps, like do you have any partnership with insurance protocols, or do you plan on having that?
I think Fred actually can speak to that. He's been actually our point person on coordinating with all these wonderful insurance providers that we've been working with.
Yeah, so the first insurance, can you guys hear me?
Yes, it's a bit low, but we can hear you.
Okay. Yeah, but one of the first insurance providers to kind of work with us actually reached out to us, and that was Insurace. And it was kind of just a moment of just kind of like mutual interest, because they were just looking to kind of reach out onto the Arbitrum ecosystem as it had recently launched, because GMX, kind of went live at the same time as, the Arbitrum ecosystem went live as well. And, essentially, it was a great opportunity to also kind of attract liquidity, right? More people were willing to kind of, become GLP stakers if they knew they can kind of, get some basic, risk protection against like smart contracts or exploits or hacking. And what was really neat was that Insurace kind of maxed out on capacity pretty quickly. And so it showed that there was a high demand for, coverage for GLP stakers. And so we started to reach out to other providers. We were able to work with the likes of Risk Harbor. We're recently, starting to work with DGIS, who's an insurance provider primarily on Avalanche, to, roll out some neat coverage, and have just recently onboarded Nexus Mutual with the help of DeFi Dad. So thank you, DeFi Dad, for leading the charge on that with the Nexus Mutual community. And these are all things that are going to really help, solidify kind of the permanence of the GLP liquidity, and kind of help solidify our presence as kind of like that structured DeFi product on the the premier L2 of Ethereum.
Awesome. Okay. So beside this security side, what are the current GMX biggest challenges?
I think a lot biggest challenges, an ever-changing landscape is obviously one of them. Making sure that we can support with both, obviously code and documentation being available, but also just generally helping other protocols who are looking at working with us. That's kind of all sort of on the building side. The other one really is visibility. I mean, I would say that today, the DeFi world, as I say, around crypto, around Twitter, social media, some of them may still be aware of GMX. But the reality is, I think there's an extremely wide swath of people, even in DeFi and even more broadly, within the crypto space, who don't know that there is an opportunity to do something like perpetuals or leverage trading on chain. It's just simply a reality that they're not aware of, or an option that they might even consider utilizing if they could. And I think that's just we sort of talked about it earlier. It is, marketing in the crypto space is a bit of a challenge. It can either be a very high cost exercise that, many big organizations who are also very well funded from potentially external sources will go about doing. Whereas, we have to focus on just doing better in terms of, that organic effort to just keep bringing people to GMX. We implemented a referral program, which again is entirely linked to the actual fees that the protocol is generating from users as they come to the protocol. That's been very successful and has definitely helped to spread the word. So, anybody who wants can, go to app.gmx.io and they can generate a referral code and both earn some referral fees and also a discount for, their own community or anybody they're sharing it with, on trading fees on GMX. But, we continue to look for opportunities to, as I said, sort of spread that visibility, bring a wider range, a more diverse range of traders onto the platform.
Awesome. And so you're talking about users and traders. Like, can you give us some numbers about like how many you have and what is the definition of a user? Someone that comes once a day, trades once a week, once a month. Like, how do you guys look at this?
Not a problem. So, one of the things that anybody who'd like to sort of learn a bit more about the platform, we try to maintain a relatively robust stats page, which has information like total number of users. Now, total number of users really is just anybody who has, it's a wallet address that's engaged with our platform. That could be that they've swapped on our platform, they've leveraged trade on our platform, they've been a liquidity provider. But we also then take information on a daily basis in terms of, the number of active users. So that's daily active user actions. So like, for example, we have, on any given day, we track both new users. For example, we had yesterday on Arbitrum 772 new users that interacted with the protocol, but we also had 1,274 existing users who were a repeat user of the platform. So we sort of keep looking to see, where we are in terms of new users and repeat users. Obviously, with the expectation that over time the new user count continues to reduce as we, address the market. And I think one of the other very interesting aspects is that, in terms of the number of interactions with the protocol, we probably do about as much in swaps as we do in margin trading. But obviously the volumes around margin trading are dramatically higher. And I mean, again, that's just a reflection of even the way the business works for centralized exchanges. Futures and perpetuals are the biggest volume drivers sort of in the SEX space. And helping to now bring that on chain has been, very helpful. I'll just use an example. We'll be doing some announcements soon on Avalanche, but they've been thrilled. Having something like GMX present on their chain has helped to drive just so much more on-chain volume. And I think that's one of those areas where there does sometimes become a bit of a top-down limit on the normal swap business, which, a platform like GMX or even, any of our competitors who are trying to do so on the public blockchains can really help to stimulate that, new user growth, both ours, but also for the chains that we're present on.
Can you give us some idea about the user growth in the last 6 months, and also talk about the future, basically what you think the potential growth is, and what are the plans to reach those goals?
Yeah, of course. So in terms of, I think I mentioned it sort of as one of our biggest challenges also, which was how do we deal with a uptick in, how do we deal with growing our users is probably the biggest challenge. I think a few things. One, which is that we've been working on GMX Sense, which I mentioned is out to our auditors right now. It's going to take us obviously a number of months to both deploy that in initially a limited release and then a full release. But that's going to allow us to be able to handle a much wider set of assets beyond ETH, BTC, AVAX, Unilink, which I mentioned, really, let's call it the absolute blue chips. it'll allow us to sort of deal with slightly the next range of sort of mid-cap tokens and even potentially assets even beyond crypto, which we think will definitely help to bring attention, because we'll be able to work with, even potentially work with communities to help build on-chain markets, leveraged markets for their tokens, which again is one of those things that helps us to engage, but also just add more utility into the on-chain environment. And we think that will help to attract additional users. I think you'll also see a little bit more work coming from us in terms of how do we reduce the friction for people to be able to trade on GMX, and that may come through, let's say, integrations with wallets, integrations, and working with chains to just even work eventually with cross-chain solutions, just reducing the friction so that it's just easier for people to trade. I think it's a big part of helping that onboarding process. And the last one, which is we have some partnerships that we're working on that can't announce, but to really help further fuel the referral side of our referral program. Our referral program, because one thing that's been really well received is that entire program is available. It is on chain. It is verifiable. There's very little in the way of trust that's required. And I think that's something very valuable for people who are active referrers. Quite often, what they're doing ends up in a bit of a black box in organizations where they can't see if they're really getting what they should be receiving. And I think that transparency has really helped to make this referral program in a very short period of time, gain a lot of traction. And then I think the other thing you'll see is some announcements around trading contests and other activities to really just help stimulate drawing, new users to experience, GMX.
Okay, and like maybe, can you tell us why you decided to limit? It's already a lot, but to limit the leverage to 30x, because there's some other platforms out there that offer more leverage, and it seems that one of the reasons why BitMEX was so kind of successful in the early days was basically because I think Arthur basically said that the platform exploded when they decided to increase the leverage to 100. So I was wondering if it's something that also would make sense for you or not, or if there is a limitation on your side to do that.
So, so let me try to address this properly. And so let me actually use the BitMEX example. If you traded on BitMEX back in the day, the reality is there were moments where the protocol the platform ground to a halt. You could have situations where the APIs weren't accessible. The front end would just freeze up. It wasn't a common occurrence, but it was absolutely an occurrence at that moment where quote unquote 100x leverage mattered. And I think, you definitely could end up with situations where, effectively the available liquidity on those markets could blow out. So, I think as of now, can we go higher than 30x? We can. There's no technical limitation. We've just been working to find that right balance for reflecting that, if you look at the way that GMX is set up, for example, we effectively, to avoid issues around front running and to create this sort of fair market, effectively most orders, there are ways to do limit orders, and we're enhancing our limit order setup. But outside of the limit orders, when we talk about market orders, effectively your order comes that you submit the order, we pull an Oracle update that pulls the immediate live market price, and you get executed slightly better or slightly worse at that live market price. Now, with that setup and the way we're configured today, we do know that, invariably in that, as liquidity providers, we are, in GLP, there is a certain level of risk that they're taking in terms of risk reward. And, how much collateral have you kept to be able to liquidate so that if that position does reach sort of that liquidation point, it can be liquidated safely? From our review, we felt we came to that appropriate level. I will just use as an example that if you used to trade on BitMEX at 100 times leverage, in reality, you would think that means a 1% move is liquidation, but in reality, a 0.5% move was actually liquidation for you over there, and their liquidation was was definitely not in a manner that we thought was as fair as the approach that we've tried to take, which is, the oracles, the oracles update, you get liquidated. If there's any capital left over, you get that capital returned to you. There's nobody else who's sort of profiting off your liquidation. It's just simply, it's a forced close, for the lack of a better term. So, I think just with all those mechanisms, we sort of ended up at that point. I think that with GMX synths, you will see a lot more granularity. I think there'll be more flexibility to take higher leverage for could be enabled by governance for tokens like ETH, BTC, and maybe even lower leverage for other tokens where maybe it's not going to be appropriate to allow for that level of leverage. And again, using your BitMEX example, you couldn't trade 100x on ADA or on all tokens. It was only on select tokens.
And this new upgrade is live in a few weeks, you said?
No, it's gone out to our auditors. Obviously, that process will take its time. Our hope is that by the end of this quarter, we'll release it in probably a limited on-chain release, probably with some caps in terms of deposit caps and trading caps, to really just start to test the protocol on-chain.
Okay, awesome. What are the biggest risks to GMX success? Because we've seen a lot of people, especially kind of like really people who are seen as top traders and top investors in the space, talking very positive about GMX, the long-term potential. Like, if you had to be self-critical, what are the biggest risks to your success?
Complacency would in theory be a risk, but I don't think we're very complacent. We're always sort of focused on what should we be doing next. I don't mean to, not to make light of it, but I'll use an example that we went through, GMX fork season where, people were forking GMX, deploying it onto multiple chains, including some deploying on Arbitrum itself even, forks of GMX. And while they were busy working on forks of GMX, we were working on deploying an entirely new platform, which is now, which will go live soon. So, we think that we need to keep focusing on that. I think from a risk standpoint, having a little bit more broad clarity in the DeFi ecosystem around regulations would be helpful. I don't know if it's a risk, but it would be helpful because we obviously try to be good actors, but at the same time, it's not like anybody's making that process easy by saying, here's what it is. And I think the other one is, as you said, we just need to make sure we keep listening to what liquidity providers are saying they want from an experience, what traders are saying they want from an experience, anybody using it, just constantly taking that feedback and then delivering on it. And it is easy for quote unquote success to, for people to think, well, we know better. I think that's the one thing we know we don't know better. We're not, of our core contributors, I don't think there's anybody who's, a top professional trader or, has run the biggest liquidity books. It's actually very humbly taking that feedback from everyone that we just need to keep doing, to keep delivering.
Okay, maybe some words about the team. Like, how do you recruit people to make sure you have the kind of people who are not becoming complacent and or just like continuously looking to improve things, especially in a DAO kind of structure where, again, in the ideal world, the DAO works perfectly, but like, as we've seen, I'd say like when you have a leader is much more easy basically to have kind of very motivated people. So how do you guys handle that to make sure you basically have the right people on the team and everybody is just working all the time to improve the platform?
You've absolutely highlighted one of the most difficult challenges in DAOs, and not just DAOs, but just obviously a DAO, but then also which not all organizations that do not maintain a physical presence are DAOs, but it's an added aspect of that. Of taking remote work and then the sort of DAO governance structure. I guess the way I would think about this is that joining as a community contributor, then becoming potentially a core contributor, that entire process is one that is very much driven based on, have you been able to deliver something to the DAO? And I think that in many ways it's not been made that easy to sort of take on those roles. I think as a DAO, we will welcome anybody who's happy to provide contributions. But for that to go further and further, it means people have spent that time, they've engaged with other contributors, that comfort level has been established, and then it goes from there. Very sincerely, I may be a core contributor, but I went through that exact same process with some of the prior communities that I was involved with, and then it grew. Frederick as well. He would tell, I'm sure he has any thoughts here, he can share them as well, but we sort of do it at a very cautious level. It probably means that we have less people involved than some organizations, but those that are involved are much more committed.
Awesome. Is there anything you want to add today regarding anything, maybe something you think we should talk about that we haven't, or something that, you want to talk about?
Well, actually, maybe it's a little bit about Yield Labs. I was going to just say that I really appreciate, what you do in the space. Quite often, so much of DeFi is chasing after, the short-term high of a new project, a new deal, a new vault, a new something, as opposed to, how do you look at this? How do you look at sustainable long-term yields? And I think so. I guess I really appreciate that sort of approach that you take, and how it really aligns with the way we also think about creating these hopefully sustainable models.
Yeah, 100%. Actually, like there's all these yield farming, crazy APYs and all that stuff, but like it's really rare to see some protocol that actually delivers some real revenues and derive some real yield out of it. So for us, it was pretty much of a no-brainer to basically dig in and understand a bit better, because people in our community are people who are looking for exactly what you guys are doing. So thanks to you.
Right. Thanks to you. Great.
Awesome. Thank you very much, guys. It was a pleasure to have you on today.
Thanks so much.